On Savvy Business Hub here, and this video is on how to use Tradingview, one of the most progressive and important apps you'll be needing for your trading or technical analysis. Yeah, and to confirm some stuff, the video might be a little bit long, but you should endeavor to watch it because I left TradingView, MetaTrader 5, Binance, and KuCoin are the major apps you will actually be making that money you so need from. So TradingView, I'm going to first be going to Play Store where you can download it. Actually, it shouldn't be much stress, but I just have to do that. So you search for TradingView. So since I already have TradingView app, it needs updates, but I'll probably do that later. Let me try updating it. Alright, so I already updated my app already, and I'm going to be, so you can see this one has 4.3%, 4.3 review. So that has like 86 percent positive reviews, and it has 10 million plus downloads. So you can see lots of people have not even gotten into the financial markets, and there's so much money in it. So for now, you're seeing an early bird into this. You get to there are a whole lot of opportunities, and then once you take the opportunities, you see that you start to profit or get rewards from it. So we will go back to our money and cash flow folders. All right, so we're in our money and cash flow folder now, and we would actually be going to TradingView. So what you do is just you need not sign up actually, but the reason for signing up is that for the reason for signing up is to ensure that anything you were doing on the app previously is automatically saved. So if you are probably doing analysis now, it's automatically saved. Your previous work will still be there. Everything, the way you left it, it will be there. But if you don't sign up or log in into it, you have to start doing the same thing again. And probably you've already mastered the things you need to do. Instead of just stressing, you'll just be placing those things on maybe your analysis, or just you know what to check already. You have your watch list and all of that. So TradingView is an all-encompassing app. It contains stocks, contains forex, currency pairs, this thing, crypto, DeFi coins, and a whole lot of that, and new setups and communities and all of that. So without much further ado, I'm going to be going to the app. So the only thing it doesn't contain is indices. So for the indices, I'm going to be doing another video on that entirely. So to show you the chart of indices market. So TradingView. All right, so this is where you create your watch list. So these are my watch list here. I'm watching you lots of coins and the likes you get, but probably this is where you add your watch list. Maybe you're checking, maybe you want to check Apple Store. Although I don't actually need the watch list, because most of the things I do here is just technical analysis, where I can analyze coin, get the percentage I want to use and all of that. So maybe Apple stocks now. Okay, this is it, AAPL. So maybe this is what I want to look at and all of that. So it still boils down to the chart. You get them. So let's say, for instance, now I'm going to take you to the chart immediately. I want to check out Euro USD. So all right, so let's say you want to check for Euro USD. Now there are lots of brokers. So your broker would have a panel where they trade. The reason why it's important to use your broker is that it gives you actual price of what you are trying to analyze. So in this case here now, you need to give room for spread. in your analysis, you get, in this place here. So but for just this video sake, it will be Euro USD. Let's use Euro USD. So we have different brokers here, as you can see, FXCM, Oanda. So I'll be using FXCM for the purpose of this video. Alright, so you can see now we have different time frames. We have the daily, we have the four, you can see we have the daily, the 1 month, 1 week, we have 4 hours, 1 hour. So one thing to understand is that the higher the time frame, the lower the movement of price. 1 minute time frame will be very, very fast. 1 second will be very, very fast. But 1 second is second time frame is for those that are their premium subscribers. So but we still have the benefit of the 1 minute time frame. We don't need more than that, because sometimes if you overanalyze, you will miss entries or something. So yeah, so that's basically it. So this is a daily time frame now. So let's assume this is a support now. Okay, don't let me go. Let me just give you a brief on the tools here. So this tool, trend line, is for drawing lines. Like, you can decide to drag it as long as you want. If it is like this, if it's like this, and trend lines, just to draw lines as long as you can permit, or your skill set. So the next one is I'm just going to be describing the ones I use it. Horizontal line. This one is to draw line throughout the, so you can see now. Vertical line, you can see. Another one in which I use is this rectangle. So this one I use it to mark other blocks. So you can see here now, let's say you can draw it as big as you want, get. So but you should know what you are doing. Then which other one do I use here? Well, that's basically what I use there. Test, no, nothing for now. So this one too is important. This is where you actually oftentimes we do top down analysis, and then we make an analysis from the higher time frames, but we take our entries from the lower time frames. This is for, I said that the monthly chart moves slower, you get now. So and the lower time frame move faster, and then there you can actually achieve low stop loss. So this one is actually going to be the most important tool I'm going to talk about. So without much further ado, let me go to the usage of the smaller. Let's say you want to place a trade now. So all right, so let's do something quick now. So I'm on the lower time frame. So let's say here is my where I want to place the sell limit. Let's say this thing had not happened yet now. This current, sorry, let me mark it coming. Let's say this had not happened yet. From here, this point here now. So we only add this, you get now, and then price came here. After your analysis, you knew it was going to come down. So this was your first point. So let's say you say you wanted to sell here. So you can as well refine this point here. So this is for those that will be doing technical analysis, but just to show you something. Then 15-minute time frame is still big, so I can just do it like this. Try as much as possible to ensure that I don't miss out on this trade. So if there's anything on the 5-minute, I'm going to check. So I'm okay with that point, you get. So what I'll just do is that, let's say this is this point here. Sorry. Let's say this point here is my first POI, or where my first take profit. You get. Let's say this point here is my first take profit. Let me use horizontal line, please. So let's say this point, like I told you already, that place has not happened yet. So let's say this point here is my first take profit, and I already know that this is where I want to sell the price. So my stop loss is above this point here now, above this point here, just slightly, above this place, just slightly. So my entry is at this point here. My entry is here. This is where my entry is. You see, that's where my entry is. So let me just remove this stuff here. So my stop loss is the second one. Let me depict it with something else, another color. Let me use red for it. Then my take profits, let me use blue for it. So you can see, no, let me use green. So you can see now. So let's say that's my entry. You can see price touch that place. So what you can use, this is a short position that I want to sell. So short position, your stop loss will be above price because you want to short it. You want it to be that, okay, if price should go above that price, okay, oh, this is the amount I'm going to lose. But you want it to short. It's an instruction. So you just click on short position. So sorry. Okay, sorry. So you can see here now, I already set my stop loss already. The entry price is where this blue and gray points meet. So I just increase it to where my TP is. I just increase it to where my TP is. Sorry, I'm having an issue with that. Alright, so you can see now. So what's the risk to reward ratio? About my stop loss is 5.6 pips, and then my reward ratio is what? 56 pips. Is what? 63.9 pips. You get now. And then let me tell you how beautiful this thing is. I'll show you that it's really something you need to ensure that you become a part of. So look at this now. All this move happened. Let me tell you how long it happened. So that's for short position. Now date and price range. So let me show you something now. All this move happened in just 6 hours 45 minutes. 6 hours 45 minutes. So 62 pips. Based on the calculation in which I did, 11 points. So you are risking 1% to make 11%. With leverage, you can actually make more. So what that means is that, for instance, now if your risk is $3, you'll be gaining $33. If your risk is $5, you'll be gaining $55. If your risk is $10, you'll be gaining how much? $110. If your risk is $20, you'll be gaining $220, like that. So if your risk is where you have a lot of money, you have $100 that for the risk, that's $1,100 in 6 hours. So you can see that it's really crazy, and you need to be a part of this. So let's say, for instance, now for long trades, okay, let's do for long trade now. So let's use this as an instance now. Let's say that, okay, we believe that this price was going to come down here, and let's say our stop loss is just below it here. Sorry, let's say our stop loss is just below it, and then I'll take profit because we know the price is going back there. So let's say I'll take profit. This is just an instance, just for you to get the insight. So let's say we know price is coming down. So we just long position. You can also calculate it through this place. You get. So MetaTrader doesn't have this feature. So but it is where you trade, but it doesn't have this feature. So you just see. then the stop loss just, yeah, you get now. So you can see now the risk to reward here is um I think around 12.53%. 12.53%. So this is, this alone, just this small move is 50 pips. 50 pips, and this, and and stop loss is like 4 pips. So let me show you how long that just took. Let's see how long it took. So you click on that date and price range. Let's see how long it took. So that alone took um 3 hours. 3 hours. It took 3 hours just to get to that point there, or even less safe gone. So, but the thing is that, you actually waited for this move to play out. For instance, now maybe price was here when you saw it, and then you knew it was going to do like this. So definitely you waited a bit. That's why I said patience too is important for you to get the best move. Imagine now, maybe you are waiting for like maybe you waited for like 6 hours for just a 3 hours trade, you get, and then you are making so much, you get now. So someone with this 12.53 now, risking $5 means you'll be earning like $60 upward. Risking $2 means that you'll be risking just, you'll be getting 25 dollars or so. So but the thing is that what we're trying to ensure is to ensure that you get tight stop loss. So the money would not be too significant that okay, you are risking just $2 to earn this much, or you're risking $5 to earn this much. So you know that okay, this is the amount I'm going to lose if it gets bad. And then you see that okay, you can actually get wins of 2 out of 3, 3 out of 5, and then you still be profitable. Even 2 out of 5 will still be profitable because of the risk to reward is much more bigger than the um the the reward is bigger than the risk. So let me see any other feature here. So date range, price range, you can, so how many, okay, this one will be useful for the crypto one I want to show you guys now. So this is basically what you need for the forex one. So let's go to something on crypto, particularly useful for futures trading. All right, so let me remove all drawing and indicator. So yeah, so let's use futures as an instance now. So let's say this is a liquidity void here now. So let's say 50% of, sorry, let me just do this, sorry guys. Sorry please. So 0.236 of it. So people might not believe, but I will have caught this move definitely. So, or maybe the middle of this too. So sorry. Yeah, so let's say we want to buy. I already said this is a liquidity void, and then since price already got to 50%, mitigated 50% of it, the next move oftentimes always like between the middle of, next mitigation is always between the middle of 0.236 and 0.32 of the Fibonacci levels. So what we just do is, since I already know this, what I will just do is, imagine, let me show you something. Long position. So let's say from here now. Hope you all remember the lessons on futures in which I said in the first video. So let's say my first TP is at this point here. Is at this point here. Let's say it's at that point there. And then let's see my stop loss. Okay, sorry. My stop loss is just below this thing a bit. So let me shift my stop loss. I can't have a stop loss this big, definitely not. Sorry. Sorry, I'm coming. So it can't be too large like that. So because you need to leave room for air, like room for. Okay, all right, touchdown. Okay, so here now I have a stop loss of 0.16. I have a stop loss of 0.16. You can see a stop loss of 0.16 and a take profit of 2.23%. You get that? So 2.23% move. You get our leverage since we have a stop loss of 0.16%. You get now. So let's now calculate. Let's say on this trade, service said that we should risk 3% of our account. Let me show you the beauty of futures trading. We'll be using our calculator now. So we'll be using our calculator now. I'm going to be showing you the beauty of um futures trading. Let's say service said, okay, like I said, let's just use 3% of your account on this trade. We have a stop loss of 0.16. So we just go to calculator. So you calculate it. What is 3 times 3% of your account? Let's say you have $100 now. 3% times 0.16, that's 0.48. 10% times 0.16, that's 1.6%, not up to 3%. 10x leverage times 0.16% of the stop loss, that's 1.6. You get. Then 20%, I know the actual value, but I just want you guys to understand something. Times 0.16, that's 3.2. You get. And I say you should risk 3%. So let's say you just find a way 16 times 0.16, or let's say you do 18 times 0.16, or let's see, okay, 18 times, let's say you now use 18x leverage. You can see the logic now. So times 0.16 is just 2.88% of your account. So let's say you have $100 now, and you're using this amount of leverage because of your stop loss is tight. If you should calculate it with the percentage in which I say you should use this thing for, it is still okay, because 18x times 0.16 will actually be 2.88% loss if it goes against you. So now imagine our percentage profit was supposed to be 2.33. That's 41.94%. You get 41.94%. So that means that, okay, times that's 41%, 41.94%. So that's 0.4194 times 100. That's $41.94 profit just by risking $2.88. Look at the ratio of these trades now. 13.96. That's the percent of this trade now. That's what futures trading can do to you. If it is 1% that say you should risk on that account, you need tight stop loss. I've been making mention of it, and that's what we are going to provide to you. So if it is 1% that you just want to risk, 5 times 0.16, 0.8%. 6 times 0.16, that's 0.9. So means you can use 6s leverage times 0.16, so that's 0.96. So on this trade, if it should go bad, you'll be losing just 0.96 of your account. That's just 0.96 of, let's say, $100. If it is okay, now okay, 6 times 2.33, let's say it gets to your take profit 13.98. That means that you're making 13.98 while risking just $0.96. You get that? So that's the essence of tight stop loss. It is your risk, your stop loss, that determines the amount of leverage you'll be using for futures trading. You get now. It is profitable, but it's risky, but you need to learn how to manage your risk. So this is something in which I wanted to explain to you guys. So well, that is basically it. And how long did it take? Let me show you something. price range. It took okay, sorry, I went to click on something else. So date and price range, let's see how many days it took, the how many hours. So I said up to this point here. So it took 5 hours 45 minutes to, let's say, make $41 on your $100, 41% in a day. You make losses too, but what I'm trying, or what I'm laying emphasis on, is profitability, to ensure that you're actually making much more profit than your losses. Losing little amount to gain more amount, gaining more amount to lose little amount. That is our motto, and that's what we are actually, working toward, or ensuring that you actually get. You get now. So this now 5 hours. You get. So that's basically the logic to this thing called trading. Even if it is spot trading where no risk, that is just 2.33% you're going to make. At least you know that, okay, I'm making 2.33% and then you're just risking 0.16. So if the trade goes against you, you'll just be losing $0.16. You get now. So something like, now imagine someone with a large account. Maybe you're building your account, you're building it, you're making this 41, even in a week, 41% on a trade. That's something. You get now. So let's say you're now building it. You need not be greedy. If that's the only thing you trade in a week, let's say that's the only trade you make in a week, that's still something on your $100. You get now. You can decide not to trade again, or you can decide that, okay, maybe your target is 30% every week, or maybe 20% every week. What you just do is that, okay, the $10 profit on top, because 30% of $100 is $30. So the $11 extra is what we are going to use to play with throughout that week. You get, like, that's what you're going to use to play with and take other trades away from your plan. So you need to plan well. All those things are going to, tell you guys about it. You get. So that is something. Now imagine someone with maybe a $1,000 account. Now I want to risk 3% on this trade. Let's calculate it. So someone with $1,000 I want to risk $30. You get now. So that's let's say 100 times 0.16. Sorry, 20, 30 times 0.16. So let's say I'm risking my 18x leverage. That's 18 times 2.33. So that means that on my 441.94 percent, I'll be making $414 just in 5 hours. It's possible. While my losses will be $28 on 1,000. That's reasonable enough. You get now. So now imagine, I can tell that I'm not trading for that day, or that, let's say my trading plan is 20% in a week, 30% in a week. The remaining money on top is what I'm going to use to play for the rest of the week. So I'm just giving you an hint of an important strategy now, so in which you should, take note of. So here is a video on how to use Tradingview for beginners and everybody. So take note of this, and then watch this video, make good use of it, and I'll see you in the next video, and service it.